First of all, let me just say that the views that I'm going to express here are not the official view of the French government. Even though France Strategy is part of the Prime Minister administration, we are independent and responsible for what we say, and we do not represent the views of the government. So I will take here a slightly broader view as in comparison to the first session we just heard, which was really interesting, by the way, and touching upon some of the key challenges. I will just like to remind us the context we are in. We are in the midst of a large crisis in Europe, at least on 4 different fronts. First of all, the Eurozone crisis is still not over. Of course, we have the migration crisis, which is with us and will stay with us for some years. Of course, we are in Paris. We all remember what happened this year and the year before. And the security crisis is also there. And all that in the context of a rise of populism. And I must say, legitimacy crisis of the European project with a decreasing public support. This is not specific of the European project, as we've seen with the US presidential election, for example, but also the vote on Brexit. It's a general rise of populism across all democracies. Why I'm saying this today is just that we need to remember that the European project is based on the promise of delivering prosperity, peace and prosperity to its people. So we need to have in mind that we need to restore the credibility of our European project based on the output legitimacy. What is the current sort of performance of the EU? It's not that good, of course. The decline in productivity growth, of course, is not only reasons to be found in the EU itself, but of course it's a sort of a global context of secular stagnation with a global decline in productivity growth everywhere in the advanced world. But the EU has stagnated relatively to the US for over a decade. And we are staying at 70% of GDP per capita with comparison to the US. We're not catching up anymore, as was the case in the 70s, for instance. And of course, within the EU, the widening gap in terms of income per capita between the north and the south is pretty much worrying. And as can be seen on this graph, since the crisis, the southern European countries are relatively losing ground with regards the northern part of the EU, and this is a major threat to our project, to our common goal of shared prosperity. What are the key factors behind that? What I want to stress is the widening imbalance building up in terms of savings and investment within the EU. Capital flow is not flowing from excess savings country to countries in need of productive investment. This is the key challenge, economically speaking, to rebalance growth. We need to restore capital flows going from the north to the southern countries. But of course, we need to avoid the pre-crisis imbalances that we've seen, where basically investments and capital flows going to Spain, for example, and other countries have fueled housing bubbles. So we need to allow for investment flows to basically productive investment to prop up the economic growth in the countries where there is basically catching up to foster. The private and public investment needs, of course, to be fostered much. We've seen the Juncker plan with the FC project, which is, of course, on the side of the EU, one key initiative. But we need to do much more to restore growth in Europe by fueling and basically helping capital to go and get invested in the areas where productive investment is much needed. We need truly pan-European venture capital. There are some initiatives on this front to be announced soon on the European side, but it will take much more than just some of European plans to do that. We need to basically count much more on private initiatives on this front. Pan-European investment funds will have to develop from based on the private initiative. This is all the most important because we don't see that many European startups developing on the pan-European, on a continent-wide scale. We see some of these European startups being very successful, but hardly any, basically, being leaders on all European markets as a basis as well to develop on a global scale. So that's why, and that's been said by the governor earlier this morning, that's why we need capital market union. We need to basically have a framework where private investments will be secured in going cross-border much more than it's the case now. And as you all know, insolvency procedure is key in that respect. The framework for insolvency currently does not allow the basically the capital flows to happen cross-border in the type of investment that we want, basically equity. Just maybe a reminder that we tend to forget that the single market has still a huge potential to deliver. We tend to think often that the single market is a thing of the past and that we have done what was needed to have the right framework for companies to thrive on the European scale. This is only partially true. Basically, what we have done over the last 30 years is to double the intensity of trade among member states, which is already quite a great achievement. And economic studies would say this doubling of trade intensity has delivered more or less around 10% GDP growth for Europeans. This is already quite something, of course, but what is more important is what's ahead of us, basically. We are still trading 4 times less among member states than in the EU than between US states. This is taking into account, of course, structural factors like languages, distance, and population density. This is what we call in economics gravitational analysis, so taking into account structural factors, we are still 4 times below the potential of trade that is taking place within the US states. This doubling of trade intensity that I think is something achievable over the next 30 years, basically mirroring what happened over the last 3 decades, would deliver around 14% GDP growth over that period, which is around half a GDP point growth every year, in addition to what we know already. So this is the potential, which is basically waiting for us to take the right decision for that growth to be able to take place. But we need new approaches for the single market. We have tried in the recent past to basically take actions in some areas of the single market where we know there is still a great potential. Just to mention digital single market, of course, but in energy, in all the major services sector which are heavily regulated. For those sectors, we need basically new approaches to foster the single market. We need more active use of norms and standards. We have the biggest market in the world in terms of final consumption. We need to leverage this size to basically steer innovation by defining ambitious norms and standards. Let's say, for example, banning all the sales of petrol fuel cars by 2030 would, of course, drive and steer a lot of innovations. This is the type of lever that we need to use in a sort of a more active way. The second way in which we can basically make progress is by defining single rule book and single regulators at EU level to regulate sectors, service sectors, where there's still great potential for more integration, namely telecom, energy, pharmaceuticals, and many others. And in certain areas, and that's why I'm speaking about this, in certain areas, the only possibility for us to make progress in terms of integration would be to have the same set of laws. And I think, in particular, in the for insolvency framework, there I would argue that convergence would not be enough to build confidence and for capital flows to happen, equity investment to happen cross-border. Investors need to have full certainty on the way they will be treated if problems arise with their investment. As I said, this is key for investment in productive activities. And that's exactly why, as I said in the beginning of my presentation, we need these type of similar laws to be basically enacted in Europe, as cross-border investment is at the heart of the resolve of the imbalances that we see inside the Eurozone and more broadly inside the EU. Of course, we all know that we need to develop equity financing over loans to basically go away from financing from full financing of companies by banks and rebalance the way they finance themselves. It is indispensable to develop the pan-European private investment funds, and for that to happen, we all know insolvency framework is absolutely key. And we need more than just standards and convergence of regulations. Actually, in some areas, I would argue in the insolvency framework, we need absolutely similar laws. In terms of insolvency, and I will go very fast on this, we know that there are wide divergences in Europe, and especially in terms of efficiency. You all know probably the Doing Business study from the World Bank and of course the study by the European Union, the Commission. Basically, there is ample room for progress in the insolvency framework in Europe. Let's take the example of France, for example, and over the last decade, 67% of all insolvency procedures ended up in bankruptcy. And why is that? Because the asset-to-debt ratio is basically simply not enough, basically not good enough for the company to be sold, to be saved. Sorry, simply because the companies are entering the insolvency procedure at a too late stage. They really wait too long before basically entering a collective procedure that would help them solve their situation and resolve the situation. Even the new safeguard procedure, which has a better track record in that respect, still we have 40% of the cases ending in liquidation, which is of course a better track record, but still there is probably a selection bias in this case, and if we think the best cases are going first, the best companies, those that are more aware of their problems at the early stage, go through that procedure, the track record is not that good in this respect. So why I'm advocating for similar law and not just convergence, simply because, again, in terms of trust, in terms of cross-border investments, that basically are absolutely key to resolve the problems that we are facing. This will happen only if the foreign investors has full confidence in the system is going to be treated in case of difficulties. Under which time horizon would that be possible to think of a single EU law? I think we see, I mean, the very welcome initiative of the European Commission to be announced soon, as we've heard this morning. But still, this is only one step and a very important one. But I believe we all need to think hard on defining a single framework. And maybe the next panel would, I hope, help discuss how that could be achieved. We heard this morning from the governor maybe the idea of a 29th judicial regime, or 28th after Brexit, would be an option. I would very much like to hear about this, and I would very much like the panel to discuss that. Thank you very much.